Good morning, everyone. Welcome back to our weekly commodities update. This is where I do analysis on natural gas, oil, US dollar, gold, and silver. We're looking at their support and resistance levels, as well as the most likely scenario price we'll head to for later next week. And if you guys are looking for the stock market video, check out the video from yesterday where I did the S&P 500 as well as the Mag 7s. And let's get started from natural gas. All right, so natural gas, it looks like it broke the major support we've been looking at, this 3.61. See this bounce, 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 and then it failed down here. So this is a win for the Bears currently at the moment, because of this big drop that they formed pretty much a lower high here and lower low, which confirmed a downtrend while breaking the support at the same time. So currently, see if there's a bear flag. Yeah, pretty much a bear flag. I talked about this last week as well, saying that even though this is a big bounce from the bulls on that Friday, it's still pretty much just sitting right underneath the bear flag. And that bears potentially can follow through because they have so much space. That's why I talked about pretty much on the stock market, where what I want to see for the bears is pretty much give us enough space. But every time in the market, bears pretty much just drop 1 or 2 days. But this is what you would want to see, pretty much if you're a bear in the overall market. Anyways, for natural gas, we are sitting at the next level support at 3.38. And so this level of cracks, then we're going to be looking at much lower, which would be looking at 3.2. You can see this 3.38 is a very clear level, right? This is where we took multiple times to break out from, right? You can see all these upper wicks. 1, 2, 3, 4, resistance, 5, 6. Finally broke out here. And now we're back testing, is acting as support. So prior resistance, acting as support because the price is coming from above towards it. And this is also, right, this level is the gateway to this whole structure, right? If this level cracks, 0.38 cracks, then we're coming into this pretty much this 52-week low structure that we've been forming before we broke out of all this breaking out, right? So, and the bigger picture for me now, because we retrace so much of this A to B move from the bottom to the top, we trace so much of it now that the most likely case for me is going to be a tiny range in the longer picture. So we zoom out to the weekly charts, right? Let's zoom out a little bit. Let's just go to the monthly. So because from A to B, I would measure from 8, the lows to the highs. So from A to B, this is 100% of the move, obviously. And when we retraced, it shows us how much percentage it retraced. So it looks like it's past 65, so near around 70 to 75% retracement already of this whole move. So in cases like this, where we usually pass over 60 to 70%, the most likely case is going to be a tiny range, something like that, right? In a longer term picture. So I wouldn't be surprised if we, get a bounce around in these levels, around this 3.38 to roughly 3.2 range, get that monthly bounce and set the monthly higher low, and then tighten up potentially. That'll be the longer term outlook picture. And let's zoom back in. So for bulls, ideally you want to definitely hold this 3.2 level, right? Potentially form that longer term picture. We did see a little bit of buying on Tuesday, but bears are still making lower highs, right? This is the last lower high pivot. This is the next lower high pivot. So bare minimum for bulls, you want to break above 3.574 and confirm a daily uptrend here and back above 3.6. Then we can more safely say, okay, maybe this is a low of that tiny range already. But for now, it's in a downtrend. So we don't have that confidence to say, okay, this is going to be the low of that big tiny range. But if we start forming a daily uptrend here, break above Thursday's high and bounce back above this major prior support 3.6, hold above here, then we're pretty confident we can say, okay, maybe this tiny range is starting to form up around these levels. For bears, right, you want to crack through this Tuesday's low, break that low, come back into this structure, and you'll likely potentially test 3.2. If you guys can break 3.2, which is this prior resistance over here, right? All these highs were rejecting for 3.2. You can see started to act as support. Right, break that 3.2, then you're gonna come down to around 3.11. Even if it breaks to 3.11, it can still be a tiny range from 3.11. That's why tiny range. Tiny range just means it doesn't exceed the prior lows or prior highs. So give you something like this. Even if it goes to 3.11, it bounces from there. It's still a tiny range. That's why I said you don't know where the low of that tiny range is until we get a trend change on the daily to show us some signs that bulls are holding at that level, and give us more confident if we can break above this 3.6. All right, if your chart looks a little bit different than mine, make sure it includes BADJ, just for contract apps, so it will look similar than mine. All right, let's move on to oil. If you guys want to learn more about technical analysis, check out the Patreon link for one-on-ones. If you guys got any sticking points, just book that 15-minute free call and we can talk more about it. And if you guys want to support the channel as well, feel free to like, share, and subscribe. Always appreciate it. Let's continue with oil. So oil made that weird looking sideways, absolutely nothing for a whole week. And I remember saying I didn't even want to call it a bear flag because it wasn't really even flagging. It just went sideways. And now we are got a 1-day bounce on Wednesday. Let's see if it's going to be under 0.382 for sure. So as long as it's under 0.382, it's a bear flag. So now we can start and call this more like a ugly looking bear flag, I guess. But weak bounces, bear flag, it just means weak bounce. 100% of the move, right? A weak bounce, making a lower high. That's why bear flag psychology of it is there's just a ton of space for bears to work with. Even though if it bounces a lot, bears still have so much space to make it lower high and lower low. Yeah, so I wouldn't be surprised if oil just trades between 68. So we bounce back above a little bit here, and then come up, and then rolls over, and it goes sideways. Be ping pong around 68 and 64. Probably just gonna go like that for the summer. Yeah, because even if you zoom out, right, it is pretty much a range trade. If you go to the bigger picture, top of the move, 78, right, pretty much a range trade. Bounces, 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 pretty much. And for summer, I wouldn't be surprised if we traded between those two ranges. But for bears, if we continue to get follow through from the bear flag, crack below the 64 low, then we're looking back towards this prior structure where we broke out from again. So we're likely going to come down to test the 61.3. If this 64 breaks, well, test the 61. Prior resistance is going to act as support now. We can break above here. Then I'm looking back up to 68, 69 resistance. All right, let's take that US dollar. Still very ugly looking. Nothing bullish about this chart at the moment yet. It's been like, I've been dropping for a while, 7 months. But yeah, there is so you zoom out. I'm already talking about this, saying keep things simple as long as the weekly EMA 12 is acting as support. Areas are in full control. So this teal looking line, as long as we're underneath it, bulls aren't going anywhere. Rejection didn't even touch it. Didn't even touch it. This is where we broke down from. Right. See prior support, bounce off of it, bounce off of it, bounce off of it. Now we're trading beneath it. reject it perfectly right there. Rolls over, trending with between it, right? Trend right there, right there. So yeah, bare minimum for bulls to really change any kind of trend. Obviously, it starts with the lower time frame, right? Give me some kind of daily uptrend first, or just a big enough daily bounce, something like this, like big enough daily bounce where we can potentially try to change the trend, right? Big enough bounce tries to form the higher low, failed. It's like something like this. V shape back up here, big enough room to form a higher low and higher high. But right now, there's no signs of that yet. Yeah, and this whole cluster of volume trading runs this area is going to act as a resistance when we do come up to this 98 and 99. But for now, bears are in control, full control. Um, Another bear flag here, weak bounce. So yeah, bare minimum for bulls get above 98, around this 98.6. We might start talking that we can change some kind of trend. But for now, no signs of that yet. And if we do drop lower, let's zoom out, right? This low is pretty much marked at this high. So there's pretty much that little structure left, right? If this breaks, the high of the structure breaks, we're coming into probably 96, and to the low of the structure 95. And that breaks, we're probably going to go straight to 93.7. And that's the bear side. And for bulls, just try to get above 98. If you get above 98, then we will have enough space to form that trend change. If we get a daily uptrend here, then we probably come back to around this 99 zone. Yeah, and that'll be that weekly resistance. Maybe it would come up, reject from there again, and then go sideways again. Probably around this level. We'll take it one step at a time. For now, bears are in absolute full control. And let's look at gold and silver. Absolutely doing nothing, going out and going sideways, but that's definitely a win for the bulls. I said this multiple times. We can consolidate through time, going sideways. Um, and after a monster move like this, 29% move on gold, and you're consolidating at near the highs, going sideways, that's definitely a win for the bulls. So as long as this pivot doesn't break for me, it's there's no structural change for bears. Right, this whole structure is still currently holding, and these lows are always marked above the prior structure. So as long as we are holding above the prior structure and we're just going sideways here in the structure, that's perfectly fine. The story changes when this becomes a distribution zone after going sideways for a couple months. And let's just say this does become a distribution zone. That means that there's just sellers offloading here, and then and it will roll over after it finishes selling. And then this whole structure will act as a resistance. So it'll be something like this. They come up, cracks, breaks this first pivot, and then breaks this guy. And then big drop comes, and then we bounce, come up, and the low of this whole structure will act as resistance. So we'll come up to maybe 3, 2, 4, 0. Can't get over it, can't get over it, bounce, can't get over it. Can't get over it, and then it'll just roll over. And it'll make the lower low. And then that would mean that this whole structure was distribution zone. But for now, it's holding fine. No signs of that yet. Um, yeah, it'll be a lot different if we do roll over beneath this versus what we had in November, because it's just one straight move up and drop, right? There's no like people piling in up here or anything. But look at how much sideways been going here. So when it drops, there's a lot of resistance here. Going to be a lot of volume here. Similarly, yeah, we haven't really formed any kind of sideways and highs, right? Huge up, big drop. There was no like months of going sideways here either. So that's why it's a lot easier to go back up and hit new highs. Do something like this, right? Consolidate through time, make new all-time highs, consolidate through time for many months. And if it rolls over like that, that'll be the distribution zone. But it didn't, right? Consolidate through time, make new all-time highs. Consolidate it through time, make new all-time highs. That's why I said if we consolidate through time here, and then rolls over and then bounce, the whole thing acts as resistance, you want to watch out. If you're like a longer term holder, you'll be playing the weekly and monthly charts. For now, no signs of reflex. Let's look at silver. So silver looking good too. Exactly what we want to see. When gold is going sideways, silver is also holding its highs. It's starting to get that relative strength. See, every time gold has like a green day, it bounces a lot more as well. And when it has like a red day, it's not really dropping as much. So that's a good sign. So if gold decides to test this all-time high again, silver might get like a breakout here. So we'll see. But it is pretty much right underneath the resistance. Rejection, 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 rejection. A couple rejections here. Another rejection. It's not a perfect line, but you guys get the idea where there is resistance pretty much here. So yeah, so we'll see if it breaks out. Gold makes a move, and then silver gets to break out to 52-week highs. And if we do break that high, let's zoom out. There's only that resistance from like years ago, which I don't really take that much weight onto, right? This was like from what, 2012. So I made a joke about saying like if you're still holding, bag holding here, good for you, I guess. It's finally coming back. But usually resistance just means that there's sellers up there, right? That you finally, okay, I've been holding it for a while and it finally comes back. And then you get people are shorting at the same time, and then you're also trying to sell, offload your bags. But this is like from 2012, so I'm just like whatever about the resistance. So you can just treat this as like a 52-week or not, like an all-time high breakout. There's no real resistance above you, in my opinion. We gold gets up in the all-time high breakout, silver is likely going to follow through. You just play it as is. Just same thing, right? Set your stop loss, set your pivots, and let it go. And do a trailing stop as well. If you get like something like this, you get a huge breakout, you just set a trailing stop. Raise your stop loss here, raise your stop loss there. I got to stop that right there. And you're just waiting for the next move. You can play in the next move. See how it goes. But for now, it's looking good. No signs of red flags. As long as it consolidates at the highs, same as gold, then that's perfect for bulls. All right, let's go for you guys. Feel free to like, share, and subscribe and support the channel. And I will see you guys next week for more stock market and commodities update. Have a great rest of you guys' weekend.